you don't actually know if it looks good because it's not back tested. You don't know like statistically this setup. You don't know what it should look like playing out. You're just letting your emotions or letting the market tell you that this might or might not look good.
What if I make money doing so? Why do we keep blowing accounts?
The main reason we keep blowing accounts is, as traders, we tend to oversize, overtrade, and then there's two more key ones that I'll get to at the end. But what happens when you're in an eval? You want to pass it quick. What do?
I size up.
You size up because you want to pass it quick. What happens? 2 trades, 3 trades, your account is blown. Now, like a lot of people, and including myself, I used to always want to just big size, get it over and done with, move on to the PA.
Yeah, why not?
Or try it again. It just costs you too much money. But I remember what you said to me a long time ago, and it kind of stuck to me, and I try to do it more often now, where trading your evals with less respect and with more leverage will further solidify them bad mistakes or them bad habits when you trade your PAs or your funded accounts, whatever you want to call them. So oversizing on a evaluation for like experienced advanced traders is okay, as long as they understand and they know that that is only what I'm going to do when I'm in this stage of trading. But for most people, I think sticking to their normal trading and just let it happen.
Yeah, you're talking about beginners now, that one has to build those good habits.
Yeah, I think especially for a beginner, there's no point in getting to a funded account if the only way is that you can pass it is with big size.
Yeah.
Then there's no point, because
you're
going to pay your activation fee and you're going to blow it.
Yeah, and you haven't built the confidence as a trader either.
Yeah.
What's the second one?
The second one I was saying is over trading. Again, you want to get it through it quick. What do? You're like, okay, I'm going to keep trading until I pass it.
Yeah, I'm going to pass it today.
Yeah, I'm going to pass it today. I'm going to pass it in 2 days. You force positions, you take too many trades, your size is too big, and then before you know it, you've given all the profit that you had at the start of the day back, and you've lost with some extra.
Yeah.
All this goes back to is rushing. You just want to get through this stage as soon as possible and get to the next stage.
Why do we rush? Why do you think we rush so much?
I think us as traders, we just want that nice shiny object of like that big funded account, and then as soon as that comes into your head, you're already thinking of the payouts. And when you're trading that evaluation, you're like, I want to just get to the next stage because this stage isn't real money. So you're like, just skip this stage and get to the next stage. But you can't skip the stage. You might get lucky once or twice, but then what happens is when you get lucky, you go to the next stage of your funded account and then you just blow it because you didn't earn it, you just got lucky. So I think that's what happens. That's what happens. Like once you rush it, it's getting you to the goal quicker, but there's no actual skills developed.
Yeah.
And you might pass the first stage, you lose your account in the second stage,
or you get a payout and now you have completely ruined trading skills and you think you're really good, but you're gonna have a really hard year going forward.
Yeah, because you're like, well, I risk half of my account past my evaluation, risk half of my account, get a payout. Why don't I just keep doing this?
Yeah.
Then you go into a losing streak, you go into drawdown, your payouts now, all the money you've made out of the payouts gone back to evals and they've all been blown. And then it creates that toxic cycle of, I rushed it before, so now I'm impatient in that evaluation stage, and you don't respect it. So you just want to get out of it, but you got lucky the first time and now you're not getting lucky.
And you don't know you were lucky, you thought it was skill.
Yeah, that's what happens with...
Which is horrible.
What happens with most beginner traders is like, oh, they'll hit an early winning streak and they're like, oh, this is easy.
The best way to battle that is to actually go down into the numbers and think about the realistic numbers and see, okay, how many losses in a row can I expect over 1,000 trades?
Yeah, that's so good.
Like the Monte Carlo simulators, it's so good to get you down onto earth again.
Yeah. Then I said there was going to be 2 more.
Yeah, what are the secrets?
I don't remember.
You don't remember? No, so what are the 2 last secrets?
The other 2 reasons why I think you keep blowing accounts is because you take trades that are out of your system that just look good, or you just don't have edge, or you haven't figured that out yet.
And those go to hand in hand?
They go hand in hand, because, for example, if you're taking trades that are not in your system, you're not letting your edge play out. And if you don't even know what edge is or you don't have edge, you're just gambling.
Yeah, and then you'll take the trades outside of your system.
Yeah, exactly. So I think these 2 hold you back so much more, because if you're only taking trades that are in your system and you have edge, you'll roughly know how long your losing streaks will be. So then you can size up, and as long as you're taking your trades that are in your system, even if you're over trading, you're fine. You're fine, but you'll build up, you'll over accumulate emotion, but like you're not going to take bad trades. You're sticking to your system, so your edge is going to play out over time. But taking random trades that look good, you know, entering here, scalping, whatever it may be, that will like damage you dramatically as a trader. And then
Why?
it's going to instill bad habits. You're going to continuously take trades because they look good, or you have a bias, but you don't actually know if it looks good because it's not back tested. You don't know like statistically this setup. You don't know what it should look like playing out. You're just letting your emotions or letting the market tell you that this might or might not look good.
What if I make money doing so?
In short term, you may make money, but over time, it will end up losing you money because you're going off like feel. You're like, oh, I think this looks good, or this might be a good trade. But you don't. It's not your system. I think over time, just sticking to your system, sticking to your rules, is what's going to help you pass all these accounts and get payouts. Going off like feels and emotions, short term, you might get away with it, but like over time and long term, it's going to cause you like a lot of distress. But it's not going to work out for you. I mean, it might short term, but long term, it's just gambling, I guess. You build a system for a reason. You know your system. You can trust your system. It helps you regulate. You can literally, you know, put on a trade and then win or lose, you've stuck to your system. Like, but if you're already going outside of your system and then you're entering, you've already lost.
Yeah.
And then some people might even never know if they have edge because they just think like, oh, that's a good setup, or you know, they never backtest enough to know their win rate. They don't know their expectancy. They don't know their like average like risk reward. They don't know any of this. They just go in and wing it, and I think they're the traders that are just in trouble because they're the ones that are gambling and they just end up losing more and more.
Yeah.
Until eventually they understand, or they find out that it's a game of numbers and it's a game of probability. You just execute to your best ability and let the numbers play out in your favor. If you don't even know that your system is profitable, you'll never know if the numbers will play out in your favor or you're just doomed.